Medical bills can be brutal, but what if you could turn some of these expenses into real tax savings? Today, we're going to walk through how to legally write off medical costs on your U.S. taxes. From itemized deductions to powerful advantage accounts like HSAs and FSAs, and even a special break if you're self-employed. Hey guys, I'm Sonya Moreno, CPA, and today we're diving deep into how to deduct medical expenses on your tax return, clearly, legally, and smartly. So this information is current as of the 2025 federal tax law, but always consult a tax pro for your specific case. I am a CPA, but not your CPA. So not every health expense qualifies, but many do. According to the IRS, deductible medical expenses include costs related to diagnosis, treatments, prevention, or care that is affecting the body. So here's what often qualifies. Your payments to doctors, to your specialists, dentist appointments, therapists, and more. Also, you can deduct prescription medications, medical equipment like wheelchairs or glucose monitors, preventive care, things like your annual checkups, your vaccines, and your vision or dental exams. Health insurance premiums you pay out of pocket, especially if you're self-employed. You can also deduct travel where you're needing to get treatment, including your mileage, the parking, and in some cases, even the lodging. Now, what doesn't count? Cosmetic surgery, unless it's medically necessary. General health items like your vitamins, your gym memberships, or skincare. Sorry, guys, these aren't deductible. Anything reimbursed by your insurance or paid through the tax-free accounts like those HSAs or FSAs, not deductible. Here's the catch. Only the amount of medical expenses above 7.5% of your adjusted gross income, your AGI, is deductible. So let's say that your AGI is $50,000, 7.5% of that is $3,750. So if you spent $5,000 on qualified medical costs, only $1,250 is deductible. If your expenses don't cross that 7.5% threshold, unfortunately, you get no deductions. So to claim the deduction, you have to itemize using Schedule A on your tax return. First, you're going to enter your total medical expenses. You're going to subtract that 7.5% of your AGI. So what's left is your deduction added to all your other itemized write-offs. Remember, you can only benefit if your total itemized deductions exceeds the standard deduction, which is $15,750 for single and $31,500 for joint. Here's a tip. If you're close to that threshold, consider electing your expenses so that they're all in one calendar year, like bunch them together. Now, if you're self-employed, there's another path. It's called the self-employed health insurance deduction. You can deduct 100% of your health insurance premiums directly from your income. There's no need to itemize and no 7.5% threshold. Just make sure that you have self-employment income. So you got to at least earn $1. If not, you're not eligible for employer subsidized insurance. This deduction is going to be claimed on your Schedule 1 of your Form 1040. Now, do you want to sidestep itemizing altogether? Then use an HSA or an FSA plan. So the health savings account, HSAs, you must have a high deductible health plan to consider this deduction. In 2025, the contribution limits is $4,300 for individuals, for singles, and $8,550 for family, plus $1,000 if you're over 55. Triple tax benefit, contributions, growth, and withdrawals are all tax-free. So let's talk about FSAs. These are offered by employers, and you can use pre-tax payroll dollars. The limit in 2025 is $3,300, but be careful because there is use it or lose it by the end of the year. Both are powerful tools to save on taxes for routine medical costs. Now, state tax rules do vary. So some states are more generous than others. New Jersey, I believe, has a 2% threshold. Arizona, there's no threshold at all. But then you have states like Alabama and Nebraska who have a 4% threshold. And then other states just stick to the federal 7.5%. And there are some others that don't offer, or some that offer no deduction at all. So always check your state's tax website or make sure you ask a CPA. So let's recap. Know what's deductible. Understand the 7.5% AGI threshold. You're going to use Schedule A if the itemizing makes sense. You're going to take advantage of HSAs, FSAs, or the self-employed insurance deduction. Double check your state rules. So if this seems like a lot and you know you need help maximizing your deductions and minimizing those taxes, then click on the link and book a consultation today. Thanks for watching.